Hey, Kim, good to see you as always. Today we're talking about the rise of the Robo-Advisor and the risks. It almost sounds like a scary movie, but I was surprised to learn that 3.5 million investors will use a Robo-Advisor to handle their portfolio this year. That is up 23% over 2020, which saw a record growth of 37.4%. What do you think is behind this dramatic rise in people using Robo-Advisors?
Well, not only robo-advisors, but I think a lot of people lately too have kind of taken to being a DIY or doing it themselves. There's a saying out there that says a rising tide lifts all boats. And I think that's what we're seeing as far as this trend is concerned, especially with what the market's been doing. So as you know, last year COVID hit, the market corrected, but really since March of last year, the stock market's just done one of these and at a really significant clip. So when we get through these time periods when the market seems like it can only go one way and up, people tend to get confidence that they can do things themselves or kind of maybe skimp on, talking to an advisor and just go the robo route because everything's done well over the past year and a half.
Right. Well, I'm going to tell you something that you already know here. Investing with robo-advisors, really popular among millennials. If you look at this, it's kind of broken down by age. And to me, it makes sense because a millennial's priority should be kind of putting that money away and investing. But that being said, that's kind of where the limits of a robo-advisor come in.
Correct. And to be honest with you, for some people in that age group, it's not a terrible idea. If you have someone that's just trying to get going with investing, they have so much time on their side where robo investing might be the right fit for them because they might not need a lot of one-on-one interaction with a financial planner. Whereas when you get further down the line and closer to retirement, that's really especially the point where you definitely want to start talking to an advisor.
That makes sense. All right. Well, let's talk a little bit more about that emotional component that comes with planning for retirement. Because, I would love it if, you plug in that age. I want to retire at 65 and we plan backwards, let an algorithm take it from there. But it's more complicated than that.
Yeah. And this is really where I see a good advisor come into play and provide a lot of value. Again, COVID was a perfect example. We have a lot of clients here, and I had a handful of clients who called during that time period. Remember, the stock market corrected about 30% from top to bottom during that COVID correction. And I had a couple clients call me after the market had already corrected 20% and said, Kim, I think we should go to cash. Yeah. This is going to, go down another 20%. If they had acted on that impulse and what the news was telling them, that would have been a horrible decision for them financially. So talking to an advisor who can help them walk through that decision and why that may or may not be a good idea, that can provide a significant amount of value in itself.
Yeah, just calm everybody down. I hear that. People who use apps to invest and trade also may not be aware of certain risks or even tax implications that come with us. Tell us something that maybe the average investor doesn't know about, Kim.
Right. So with robo investing, typically how that works is you go online or on an app, you kind of fill out this risk profile questionnaire, and then the robos do what they do from there, and they invest accordingly to what you told them about your risk comfort level. It doesn't always take into account tax implications. So for example, if you have a brokerage account that's naturally going to kick off capital gains, dividends, and interest, if you are in a robo program that is trading frequently, that can really end up, causing you a headache and causing more of a taxable events for you than you're really getting from the value of the robo investing. So you just got to be careful with that type of stuff.
Yeah, makes sense looking back on it. This is a lot of fun to talk about, Kim, and I appreciate all your insights with this. If somebody would like to talk to you more about maybe what's right for them, of course, maybe tax implications, maybe they are using a robo-advisor, what's the best way to reach you?
The best way to reach us is to just go to our website, www.young-wm.com. It's got all of our contact information out there, different ways you can communicate with us, a form you can fill out right on our website. So that's the best route.
Perfect. All right, Kim, thank you.
Thank you.